It's Tuesday, the 26th of October, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Taxpayers helped Telstra buy a South Pacific telco in arguably the strangest deal in decades. That's our main story. Also this morning, secrets of the future fund revealed, Origin Energy takes a bet each way on gas and renewables, and anyone want to buy a jail? Then stay listening for Sean's chat to venture capitalist Zeb Rice about opportunities in the local tech sector. But first, Sean, Telstra will spend $2.1 billion buying the Digicel telco businesses in the South Pacific. But the Australian government will pay for most of it.
This undoubtedly is one of the most unusual transactions in many, many years. The federal government, that's we taxpayers, will provide $1.3 billion plus another $330 million in dividends over 6 years to Telstra to buy the Digicel business, which includes telco networks across Papua New Guinea, Fiji, Nauru, Samoa, Tonga and Vanuatu. It was put up for sale earlier this year by its Irish owner, and Canberra lent very heavily on Telstra to have a look. Officially, it's about helping out our neighbours. In reality, it's more like warding off Beijing's influence in the region. The federal government has effectively given Telstra a gift. The telco giant will pay $270 million up front, but will pretty much get that back from the dividends. Now, good on Telstra and its shareholders. It gets an asset which, hopefully for those shareholders, will prove earnings accretive over many, many years. But, Michael, I'm not sure as a taxpayer I should be funding a listed company to purchase an asset. The irony in the deal is that Australia is using a so-called private company to push its interests in the region, which sounds just like what we criticise Beijing for doing.
I think you might be right there. So how did markets perform over the past 24 hours?
Well, the S&P ASX 200 finished 0.3% higher yesterday to 7,441 points, led by energy and utilities companies. Industrials and information technology groups underperformed. Oil and gas giant Woodside was the best of the large caps, up nearly 4%. Newcrest Mining, Xero, Woolworths and Rio Tinto all did well. Afterpay was the worst of the large caps, down 2.7%. There was a fair bit around yesterday. Mineral Resources was the best performer of the top 200, up almost 9%, after it announced that its lithium mine in the Pilbara region of Western Australia would soon restart. It's been mothballed since late 2019. Lithium group Pilbara Minerals went into a trading halt pending an announcement regarding a transaction. Remember, Pilbara is one of the best performing stocks on the ASX over the past year, up 460%. Brent crude is trading above $86 a barrel. No help at the petrol pump anytime soon. The Aussie dollar is around 75 US cents. And Michael, in keeping with ensuring listeners are up to date on all the latest news, which we like to do.
Where are you going with this?
I'm going to talk today about palm oil and canola oil.
Right.
Palm and canola oil prices have hit new record highs. Now, palm oil is the most consumed vegetable oil in the world by a country mile. But supply out of Malaysia, one of the really big producers, has tumbled to a 5-year low, just as the reopening of the economies has pushed up demand, and the Canadian canola crop has been a disaster. So, Michael, you'll be pleased to know palm and canola prices are through the roof.
You have taught me again something that I didn't know. Thank you, Sean. This is proving to be very worthwhile. How about overseas markets? What's happened on Wall Street overnight?
It was all about electric vehicle maker Tesla last night. The group's share price jumped nearly 10% after rental group Hertz ordered 100,000 Model 3 sedans to electrify its fleet. It meant Tesla became the first company with a market capitalization of $1 trillion. The big tech companies are due to start reporting, including Facebook, later this morning. Overall, the tech-heavy Nasdaq 100 was up more than 1% in early afternoon trading, while the Dow Jones Industrial Average and the S&P 500 were both higher. European markets were also stronger.
We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. There was a big drop in COVID cases in Victoria yesterday. That is welcome news.
It sure is. There were 1,461 cases in the state, and the rollout of the vaccinations is hopefully curbing the spread of the virus. While Victoria has had large numbers of cases, the state's hospitalisation and intensive care numbers are about half the level of New South Wales relative to caseloads, that is, and that's great news. There were 294 cases in New South Wales yesterday, the first day back at school for most children. Almost 85% of the state is now fully vaccinated. With the lockdowns finishing 8 days ago, the 7-day average ticked higher. It suggests the daily case numbers might not fall much further for a while and probably will rise in coming weeks. Queenslanders are being pushed to get vaccinated. The state has the lowest vax rates of all the states, just 60%. It's only just ahead of the Northern Territory. Fortunately, yesterday it recorded another day of no cases. And Michael, a shout out to the ACT. 88% of people over the age of 12 years are now vaccinated.
That is very impressive, isn't it?
It sure is.
Okay, now, Sean, I mentioned this one at the top of the show. Australia's sovereign wealth fund, the Future Fund, delivered a 1.2% return during the third quarter and is now worth $199 billion.
Not bad, really, given global equities fell during the 3 months.
Yeah, it isn't, is it?
A more relevant number, though, is the 10-year return, because we should be thinking about this as a long-term investment. That's been about 10.5% against the target of 6%. The Future Fund has done really well over the last decade. It was set up back in 2006 with about $60.5 billion, and it's added $138 billion in investment returns. I always think, Michael, it's interesting to see where the fund is putting its money, given it's the biggest investor in the country and it has such a good track record. So it's got about 8%, just 8% in the local equity market, but just as much in equities in developing nations. So their sorts of share markets like China is the biggest of the developing nations. About twice that amount is in global equities. So that 16 or 17% is in global equities in developed markets. Think Europe, the US, Japan and the UK. But the largest amount is actually in private equity. That's where the fund gives money to a PE firm to go and find good investments on trust. There's also money in fixed income, property, infrastructure and cash, among others. All in all, more than half of the assets are in riskier assets, and that's why you're getting such a good return. And there's also plenty of the Future Fund money invested overseas.
My favourite piece of trivia about the Future Fund is that essentially the directors, headed up by Peter Costello, sit on what is known as the Board of Guardians. Isn't that a cool name? Isn't that a cool thing to put on your business card? I'm on the Board of Guardians for the Future Fund. It sounds like a Marvel movie.
Peter Costello, Chair, Board of Guardians. I like it.
It's pretty cool. All right, moving on. Origin Energy, Sean, has said that it's done a deal to sell a 10% stake in Australia Pacific LNG for $2.12 billion to global energy investor EIG.
Nice price, that one. It leaves Origin with 27.5% of the Queensland-based joint venture and says quite a bit about the market. Origin is selling when gas prices are very, very high. Chief Executive Frank Calabria said the proceeds will pay down some debt and be used to pursue opportunities across the energy transition, was the phrase he used. Origin wants to achieve net zero by 2050, and this deal means there's money to buy into renewables while still keeping a piece of the lucrative gas pie. It's also interesting that the buyer, EIG, is a big player in wind and solar power, yet understands that fossil fuel energy isn't going anywhere soon. This is all about the energy transition story, this deal, about gas and renewables, and we'll be hearing this again and again over the next decade.
All right, now, Sean, we love talking about the housing market and property in Australia, but this one's a little bit different. It is a rather unusual property opportunity that's hit the market.
Yes, the Berrima Jail. Do you know it, Michael?
I am familiar with it. Yes, not from the inside, fortunately, but I am familiar with it.
You're part of the world. It's in the Southern Highlands of New South Wales. It's up for sale with an asking tag of $20 million. Now, it's nearly 200 years old. It's housed criminals from Eddie Obeid to Roger Rogerson, he was the bent detective, Rex Jackson, the corrupt corrective services minister in New South Wales, drug dealers, all sorts of people. There's a great story about it in The Australian. It was built in the 1830s by convicts, includes 60 cells, a watchtower and 2 cottages, all ringed by sandstone walls.
Just wouldn't there be some fascinating stories? There's surely a few ghosts.
Yes. 6 people had their death sentences carried out in the jail. Lucretia Dunkley was hanged in 1843 alongside her lover Martin Beach for murdering her husband. The judge ordered that they be buried standing up so they'd never rest in peace. Apparently, she's still there in spirit, Michael.
Geez, we go to some strange places on Fear and Greed, don't we?
We do. Actually, there was another really interesting character. I'm not sure whether interesting is the right word, but Australia's first serial killer, John Lynch, was executed at Berrima Jail. He murdered 10 people.
All right. And you can buy the jail for about $20 million.
$20 million.
There we go. Okay, Sean, what's making headlines in today's news media?
The Financial Review is reporting that Defence Minister Peter Dutton says the landmark AUKUS agreement between Australia, the UK and US will push Australia's defence spending to 2.5% of GDP. That's about $50 billion a year eventually. And The Australian is reporting that Coles will tomorrow launch a new online marketplace whereby customers can use the website of Coles app to buy a range of Best Buy products that don't sit on the supermarket shelves, including Apple products, table sets and ovens.
Running through some of the other stories around today, Federal Nationals leader Barnaby Joyce says the climate negotiations within the government have been resolved and he supports net zero emissions by 2050. There have been reports that Mr Joyce was among the minority of Nats that opposed the commitment made on Sunday evening by the Prime Minister. Alongside that commitment, Resources and Water Minister Keith Pitt has been returned to Cabinet.
Now, Michael, nothing like a bloke from the bush talking frankly. Former Nats leader and Deputy Premier of New South Wales, John Barilaro, yesterday described Darryl Maguire, the disgraced former Liberal MP and partner of Gladys Berejiklian, as a pain in the arse when he was lobbying for funding for a gun club. He also said the sped-up process to put the funding bid before a Cabinet Expenditure Committee in late 2016 was unusual, and the funding would not have been supported if the relationship between Maguire and Ms Berejiklian was known at the time.
I wonder if Gladys would agree with that description now, considering everything that's happened.
I'm sure she would.
I reckon she might. Okay, now Moody's Investor Services says housing affordability in Sydney could hit its worst level in a decade in coming months amid surging prices. That's not really a surprise. It does say prices need to rise by 4.6% or interest rates go up by less than half a percentage point to achieve the benchmark.
Woodside Energy said it will build a $1 billion hydrogen plant south of Perth with the support of the West Australian government to boost renewable energy supplies in the state and export low-carbon energy overseas. The plant will make 1,500 tonnes of hydrogen every day to export in the forms of ammonia and liquid hydrogen. Now, Michael, it's the second big hydrogen deal announced in October, with Fortescue's Andrew Forrest committing to a $1 billion hydrogen electrolyser factory in Gladstone.
It feels like there's a bit of momentum growing behind hydrogen, doesn't it?
Sure does. It's still an untested technology. There's still a long way for it to go to actually be usable even in heavy industries, which will be its first use case. Beyond that, there's still a lot of technology that needs to be invented.
Yeah, it's an interesting one. Now, fleet management and salary packaging company Smart Group is under takeover offer from a consortium led by TPG Global. Yesterday, the group decreased its offer by 11%. Never a good look. The Smart Group board said it wouldn't proceed with the transaction, and the group's share price ended the day down 10%.
And it's a very big day today for Crown Resorts, with the Andrews government in Victoria set to table the Royal Commission report into the gaming group. It is very possible that by this afternoon, Crown might be facing losing its licence in Victoria.
Yeah, and we'll have all the details in the afternoon market report later today. What's the key overseas news this morning, Sean?
Well, Chinese President Xi Jinping marked his country's 50th anniversary as a member of the United Nations by taking a swipe at the US. He said China would stick to the road of peaceful development and nations should work together on issues such as terrorism, climate change, cybersecurity and biosecurity. Also,
You've got to love the fact that he's commemorating being part of the United Nations by taking a swipe at another member. Nothing says coming together like having a crack at someone else.
Great irony, great irony. The Sudanese Prime Minister has been put under house arrest after an unidentified military force raided his home yesterday. At least 5 senior government officials have been detained. Sudan has had a troubled and somewhat violent few years. And remember, many Sudanese refugees have come to Australia in recent years as a result. And 11 Picassos sold for $109 million over the weekend. MGM Resorts in Las Vegas sold off the artworks, but they still own another 11. They're hanging in the Bellagio Casino, which undoubtedly, Michael, is one of the most opulent gaming houses you will ever come across.
It is quite a spectacular place, isn't it?
Sure is. Amazing.
All right, up next is the Daily Interview, and today you're speaking to Zeb Rice from King River Capital, the venture capital group.
He's a great enthusiast, Zeb. He's very enthusiastic about Surrey Hills in inner Sydney. He thinks it could become the new Palo Alto of Asia. He's talking all about the opportunities in the local tech sector.
And he's got a couple of very interesting stories about his involvement in US politics as well.
Yeah,
fascinating interview, this one.
Yeah, he sure does. He's got great credentials along those lines.
That's right. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Have a great day, Michael.
It's Tuesday, the 26th of October. Make sure you're following the podcast. Join us online on LinkedIn, on Twitter and Facebook, and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.